Hello and welcome back to another video. Today I'll be talking about Rivian Automotive. It's a newly IPO'd stock, especially in the EV space. It's definitely a hot topic in the stock market. I'll be discussing their several fleets, including their truck, cars, and shipping trucks. I'll be discussing some of the partnerships and owners of Rivian and whether or not I believe the stock will grow. As we can see in the one-day chart, it's down around 15%. The 5-day chart, it's down around 4.5%. And since its IPO on November 10th, it is up around 23.5%. One thing to keep note of is that it did IPO at $78 a share. That was a projected price. However, it has opened at above $100 a share. As we all know, IPOs tend to accelerate their pricing, especially in a hot bull market. So it was expected to be 78, opened at 173, and then came down to $95.20, and then kept moving upwards and reached a high of around $180. This is not very surprising, as we know IPOs are very volatile. Facebook, Uber all went up, 30-40% initially, and then did come crashing down 50-60+%, but now are both well-known and stable companies within the tech atmosphere. One thing to note is that this is the biggest company ever with zero revenue. It's above $100 billion in terms of market cap. The only $100 billion company ever with $0 in revenue. Even in 99, 2000, 2001, most of these companies were 10 to 20, $30 billion with no revenue. But I believe the EV hype is very similar to the dot-com hype, and I would like to explain that further. Now let's talk about some of the vehicles that Rivian produces and why the $100 billion price tag is so-called justified at Wall Street. So R1T is the least popular of the vehicle fleets in comparison to their SUV and shipping trucks. So they have three standard packages. They have their Launch Edition, Adventure package, and Explorer package. In terms of specs, they are very comparable to the Cybertruck. However, they do have an earlier delivery date, longer range, and they do have some safety features that the Cybertruck does not have. And in terms of price point, Rivian is definitely a lagger. The Cybertruck is starting at $39,400, while these trucks start at $67,000 to $73,000, which is actually a pretty big markup. You're talking about a 40 to 50% markup on a standard truck, which makes a lot of people wary. People can afford a $40,000 truck, but once you start reaching $70,000, $80,000, it does become unaffordable for most individuals. Now let's look at the R1S car. This is more of their popular vehicles, even though the price point is still very high. In comparison, a Model 3 Basic would be around $40,000 for Tesla, a well-established EV vehicle in the space, while a newly launched Rivian SUV would land you around $70,000 to $75,000, which is an 80 to 90% markup in comparison to the Model 3. However, this Rivian SUV does have a lot better specs, a lot more cargo hold, and it should be compared more towards the Model 3. However, when I was doing my comparison of the R1S to the Model X was definitely a better beast in terms of horsepower, in terms of total range, in terms of the amenities they provide. So I believe a better comparison would be the Model 3 rather than the Model X. So one thing to note is that the R1T and R1S is still not on the roads yet. Again, they have zero revenue, so they're not really selling these cars, which is not a big issue for both firms, as both firms have major delays. The Model 3 will be delivered to the earliest by June 2022, and the Rivian still does not have a date yet. It was initially for September 14th, 2021, but that's been indefinitely pushed back until Rivian is ready to launch their vehicles. Their number one segment of their project at Rivian would definitely be their shipping trucks. They are the number one leader by far in this sector. They do have many partnerships, with the most promising being Amazon. Amazon does own more than 10% of Rivian, and they have around 100,000 truck order from Rivian for their EV trucks. As you can see right there, they already have an advertisement of Amazon Prime using their vehicles. And in terms of a comparison, I believe there's no apt comparison yet. The Tesla company is coming out with a similar sort of truck, but it's definitely bigger. It's more for like long haul and more longer duration type environments, while this is for the last mile. So, Amazon, Overstock, all these shipping companies always want, to reduce their cost in terms of last mile. The last mile is always the most expensive. So Rivian is definitely the competitor, the leader in this type of space. And I honestly believe they're far ahead of anyone else. I've looked at many EV companies and many non-EV companies. I've looked at what Ford, Volkswagen, BMW, Tesla, Workhorse. I was looking at those, similar types of fleets, and they're not very competitive. Even Workhorse, who especially designs this type of vehicles, they're not very competitive, and they can't keep up with the technology that Rivian has. So one thing that keeps up with the Rivian market cap and why people are thinking that $100 billion is justified, even though I personally believe it's not, is for many reasons. One, that they have a lot of partnerships. Amazon and Ford alone own up 10% each within the firm. Ford bought 10%, I believe 13% of Rivian at a $500 million valuation. So 13% for $500 million, and now that $500 million has turned well into $16-17 billion, which is 20%, 25% of Ford's entire market cap. So great investment by Ford. Amazon did something very similar and also announced to buy up 100,000 delivery vans from this particular startup, which is very interesting because having such a large order should definitely prop up your stock, but not to this extent. Without that Amazon offer, I think the stock would not be worth more than 10 to 15 billion. Also, one reason that the stock continues to go up would definitely be the fact that companies, investment firms are still buying the stock. Amazon has bought more stock since its IPO. I believe Amazon had bought around $580 million worth of shares at $78 a share, $100 a share. So they still believe this company is cheap, even though that it's gone up so much in price. From their first Series A round, which they bought shares for around $2 to $3, adjusted to the current price of the stock, and companies like BlackRock, T. Rowe have still kept buying the stock even when it's IPO'd, even though it's gone up 100% since its IPO price, which is very, very interesting, as these firms tend to be more conservative. They don't be as aggressive as the individual investor. So if companies like that are buying up the stock, then people tend to pile in. An example can be Snowflake. People believe the IPO was crazy at $250 a share, but when Warren Buffett, the greatest value investor of all time, stepped in and bought shares during the IPO price, people were astonished, and they thought the overvalued stock was now undervalued, so they kept clubbing in. But the point is, Snowflake is definitely has much more revenue, much more moat in comparison to Rivian. Rivian has not paid itself the way to assess the EV market quite yet. They have done many tests, and many people believe it'll be successful, but it's still a startup. At the end of the day, it can definitely fail. I'm not saying it will, but it's definitely a risk, especially at these valuations. And I'm guessing the third most important reason why Rivian's going up is due to sheer hype. Many people believe that Rivian is the next Tesla. When people chase, stocks like that, I want this to be the next Apple, the next Google, next Amazon, next Tesla. It is very difficult to invest because you're basically throwing a dart in the dark, and it's extremely difficult to reach these sort of valuations. So will I be buying Rivian stock? Personally, I'm not a fan of Rivian stock. I'm more geared towards value stocks and more stocks that are proven to sustain growth and will continue to grow further. What price would I think about buying Rivian? To be honest, I don't have a price target on Rivian. I can't give a valuation on a company which has done zero revenue. So the price that I would state would be insultingly low to the company. I would consider buying shares at around $10 to $15. Even at that, valuation at 10 billion, 15 billion, it would still take me, some deep analytical research to determine if they can actually turn a profit within 5 to 10 years. So personally, I wouldn't buy the share. I wouldn't even touch this right now. And yeah, it's a great company, but the company's not always a stock. I like their products, but it's too expensive for the market. I believe the EV market is about to get really saturated, especially with Tesla already leading the way. I do see big potential in their shipping fleet. However, I do not think that department itself is worth $100 billion. In comparison, HP is worth $30 billion. So, having that valuation is definitely more risky. I hope you enjoyed this video and have a good day.